What's a K1?
Oh, hello. Love this. My husband loves to say K1s. He has no idea what a K1 is, but he always, is it a K1? I was like, you know it is, honey.
Is that late night conversation?
That's bedtime conversation. That's awkward, but it is awkward.
Welcome to the SAG-AFTRA Foundation Tax Panel.
Yeah. Yay. Welcome.
Yay!
Let's talk about making more money. Woo.
Woohoo!
Okay.
Keeping more of it.
Yeah.
That's right.
Uncle Sam has
Well-
his share.
Oh, is that the first question?
No, I'm actually going to jump into introducing you so we know
sorry. Yeah.
who we're talking to, right?
Yes.
So, let's start with you, Emily Churchill. You want to give a little blurb?
A blurb. Okay. Hi, Emily Churchill, enrolled agent here. I'm very special. No, I am. We all are special, right? We're all special. Thank you. I am actor VO and also do taxes. What? So do they. So it's fine. We're gonna be fine. Yeah, I've been doing taxes for a while, and I'm really good with numbers. I don't know what else to say.
That's perfect.
Oh, thank gosh. Okay.
Ernie Charles.
Hello. I'll just give a little brief background. I grew up in a cornfield in Ohio. Yes, and then I went to college to play sports, and then I ended up with a computer science degree and decided I wanted to be an actor. So I went to New York audition, got in the American Academy of Dramatic Arts, did some stuff there, moved to LA, did this thing called I went to the unions because I got in the union, and then I went to this thing, and they said, hey, we have this VITA program, Volunteer Income Tax Assistance. So I was like, I'm pretty good with numbers because I was a computer science numbers person. And they were like, hey, why don't you take this class with the IRS? Somehow I passed it. I don't know how. I didn't always have the best grades.
Yeah, and how many years later is it now?
Yeah. And then eventually I got further along, and a tax firm recruited me, and then I got my own firm, and that's what's kind of going on. So. And
he recruited me. We were serving together, and he's like, I have a marketing degree, and I studied at Second City, Chicago, so I'm from Chicago, Illinois, you were a busboy, I was a server, right, and literally holding food, and he's like, hey, would you want to do taxes? I'm like, sure, let's try it.
Get off your feet, let's have a cushy desk.
Yes, exactly. And pizza. Yes, and pizza.
This is great, I love this bonding. Pati, Lauren.
That's me. We have all worked together. We know each other for
this
like
whole
decades.
Thing right here. Yeah.
So like I told Courtney, this was a mistake putting the three of us together because we will go on for hours.
Or the best thing ever.
Yeah. Welcome to our firm. Right?
And I really like these people too. I actor taxes, doing all the stuff. Been doing it for decades. I really, with my clients, I do the taxes, but I also really push financial literacy.
Oh yeah.
I had a children's TV show teaching that years ago, and I was a junior achievement counselor, and I just have this thread through my life of teaching people how to be better with their money, and if you're disciplined and you're willing and you're not trying to keep up with the Joneses or the Pitts or the Jolies or whoever, you can do fine, and save some and take better care of yourself and your family.
Yeah.
I think
Can we add to that? We were just talking about this.
Oh,
California
yeah.
established a financial literacy program. Yeah.
Oh, sorry.
So
Yeah,
in
super
2000,
exciting.
I think it's 26 or 27 students cannot graduate high school in California unless they have a certificate for financial literacy.
Which is awesome.
It's about time.
amazing.
Yeah, right?
So helpful.
Yeah.
I think in general, being specific about actor taxes or as a performer doing taxes, that's why this is extra special. Because there are definitely accountants out there that don't understand what it's like to be an entertainer, because as we know, that is a completely different life. I mean, we're talking about a completely different hustle that a lot of people don't understand the ins and outs of. And you're navigating oftentimes a entertainer support job that is not the thing that you want to be doing. And then you get so lucky to get the things that you do want to be doing, and it's just all mixed up, and we have to sort of unmangle it and navigate doing our taxes. So with that,
Oh, here we go.
Let's jump in. So what are all the different types of documents that artists need to make sure that they have when they're doing their taxes from that perspective, where they're navigating multiple income sources, right? Their income from their artist support work and from their art. Who wants to take it first?
First, each individual person is different.
Yeah.
And so our answer depends all the time. We can say this, and then someone else comes in and has a different situation, and then we have to adjust whatever. But
I tell my people, keep track. This goes for your money and your documents. Keep track of everything coming in and everything going out. So as you book multiple jobs, I don't know what the W-2 record was this year. I had like 32.
Oh, yeah.
Yeah, people with 32 W-2s,
Yeah.
48 states, because I've got people
48
on
states,
tour,
yeah.
dancing and playing music and all that.
Bi-coastal.
Exactly.
Some people are.
Foreign income sometimes if they're on tour. So as you get a job, you gotta get organized. You gotta keep lists. And nowadays the W-2s and the 1099s, they're not just mailed to you. Sometimes you have to go into like a website to download them. Because in the past we always just expected them in the mail. Well, that's not true anymore. Sometimes they email them to you. I think we've got to get some like uniform. Yeah, there's got to be something happening to get them all together, but keep track of everything.
can I add to what you're saying? And that is,
Yes, you may.
you should you learn when you're starting off. A lot of times we struggle and we try to learn things, but if you can learn it when you're on the small level, the goal is to get to the bigger level, right? But if you can learn it on the small level, hopefully you can accomplish and do well as you get more successful.
If you can't manage 20,000, you can't manage 2 million.
Thank you. And I'm gonna off of that. You cannot make how do I word this? The IRS will audit you no matter what you make. Love bugs. Yeah. So don't ever say to anyone, "Oh, I don't make enough." They'll come after you. I'll tell you why. Because they don't have enough funding to go after the people with a lot of money because they have the money to get lawyers. So no, don't ever let anyone tell you that you make too little for the IRS to come after you. You got that?
To add for financial literacy, I think this is something that I learned that I implement. You guys can speak to this too. I don't know if other people are doing this as well. Having a bank account where the income from their non-entertainment income is going and a completely different bank account just to help keep track, or maybe even both that and 2 credit cards, right? The credit card that you use for your regular bills and then a credit card specifically for keeping track of expenses that are related. Do you want to speak to that? And I feel like we haven't fully answered the question about the documents. So let's address this and then circle back around to that.
Well, I was going to jump off cue again. No, I think it's important. You're not going to remember everything we tell you, and you're going to have different situations. But if you continue to educate yourself as you go along, so important in this business to continue to educate yourself so that you can only, educate yourself to be a better performer, but you also want to educate your financial area so that you have money to do what you need to do.
What can actors write off?
I mean,
Let's boom, boom, boom.
Yeah.
Headshots?
Yeah.
Next.
Go.
Let me think. Business meetings, and I call them business meetings and meals.
Yeah. I mean, anything that's ordinary necessary, y'all.
Ordinary necessary.
Right? Like that's the IRS definition, ordinary necessary. So think of anything you pay for that helps you create the income coming in. Yeah?
Yeah. Our internal revenue code 262.
Thank you.
Or 162. 262 is the other one. 162.
And don't think of if something is a business expense. Think of how it's a business expense.
There it is.
Your cell phone. What percentage of your cell phone do you use for business?
That's right.
Can I go back to what I had said to business meals and meetings? I call it that because it sounds more official. You have to put on the receipt. If it's in town, you have to put the name of the business associate you met with and the project you discussed. Now, if you go out of town and and the trip is for business, you can prove it's for business, then all the meals are deductible. You don't have to meet with anyone. So,
what if you're scouting a location for a project that you're working on, but you're not getting paid to do it? Because many of us, right, we're creators now. We have to start creating our own things. So we're we're not just actors, we're also writers and content creators, and maybe we're making something for a film festival or YouTube or something, and we have a meeting to discuss script ideas, but the thing isn't making money.
Right. So
So
you're
what do you
trying
do
to
at that
network
point?
and advertise and what do we call? We're trying to
Research, professional research,
yeah.
promotions. Yeah.
We're promoting ourselves. So I write off the business meal or the business miles to and from there. Meal, if you had a meal. If you end up renting a space, you write that off too. So
But you still have to have income to take that expense from.
True.
true.
So make money.
You got this. Yeah.
What's the difference between standard deductions and itemized?
I know.
That's
kind of tough right now.
Well, yeah. They changed the law a few years ago.
2018.
Yep. And tax cuts.
TCGA.
Yeah.
Thank you.
Thank you. And they disallow business expenses against W-2 income.
Just on the IRS side.
Yes. Now in the state of California, it's allowable. New York, it's allowable on the state returns. So I always tell people you keep track of your expenses no matter what.
Yes.
But where's it going to go? Oh, but you can write expenses off against 1099 NEC, which is non-employee compensation income, independent contractor. You can use business expenses against that type that goes on what's called a Schedule C. So, but you don't want to get crazy and take a huge loss. Then you might see the IRS get a nice notice saying, hey, we'd like to see all your receipts. Or actually, they also audit income a lot too. And then they pull your bank accounts. Now, all this is a lot. You don't have to remember everything and just relax. And I know, just
Replay
remember.
the video.
Yeah. Remember.
It's intense in here.
Yeah. You don't have to be perfect. You just got to do your best to try and, if all else fails, I always tell people, at least keep your receipts. So
Keep track of everything coming in and everything going out. And then we can help you from there. If you don't have the good records to bring to us, then we can't help you. There's a room for you out back.
I teach an industry class at AMDA, American Music Dramatic Academy, and they teach income and expenses as it relates to performers. So.
Yes.
And anything more on standard versus itemized? Any other last tidbits on that before I move on to the next thing?
Well, okay. So the standard deduction is $12,700 now. So, oh gosh, yeah, this goes down along because then there was the exemption, and now we don't have the exemption, so now we have a standard deduction.
For anyone that thinks we don't earn our keep.
Yeah, right. You're like, well, every year. So basically, that's hard because of the 2018 Tax Act. That's a little bit more difficult to answer than before. Because in 2017 and beyond, or beyond, that's funny, we had the 2106. So I don't know if you ever heard of that, but that's the 2106. That's where we would put your business expenses against that W-2 income. We still do taxes the same way. It's just that 2106 only goes to state. IRS is like, we don't care.
Unless you make less than $16,000 and you have two W-2s and you become a QPA. QPA, what's that? Qualified Performing Artist.
Oh, great job.
And people always go,
that.
oh, I want to be one of those.
I wanna be one of those.
I'm like, no, you don't. You're poor.
Yeah.
Because your income's under $16,000 to start with. So the only people that usually qualify
Yes.
are children or someone who lives with someone.
So if you do TurboTax or anything like that, do not click Qualified Performing Artist. That is only $16,000 or less on all W-2s, y'all. Right? That's not like, well, I was on Two Broke Girls. Yes, you are a qualified artist, but a qualified performing artist to the IRS is $16,000 or less. Got it?
Yeah.
Yeah.
That law came into play in 1986 and they never adjusted it for inflation. So that's
It's
why
ridiculous.
so low.
It's ridiculous, but yeah. Sorry. Yeah. Oh, too much. Is that too much?
That was
Okay.
amazing. Oh, come on. Is that all you got? All right, here we go. Okay. We're going down this rabbit hole. S corps versus C corps versus LLCs. I know that some artists are interested in knowing when is it time to start one of those and what is the difference between them.
An LLC offers no tax profession or tax benefits, rather. An LLC offers no tax benefits.
Single member LLC.
Thank you.
Yeah.
Thank you. This is why we work together. it can be a legal decision, a business decision, but why pay state of California an extra $800 a year just to have LLC behind your name? Now, some businesses require it if they want to do business with you. I don't know. But I advise against it because it's usually just money on your 1099 and it's going to go on a Schedule C anyway. Yeah. So save the money.
Yeah, I always have people, well, I want to incorporate so I can protect myself. I'm like, oh, what do you have? From what? I mean, you have your old TV and your beat up microwave. What are they going to get if they sue you and you're to spend less in lawyer fees? Because people go, well, I do it in Nevada, which is another one we always get, or Delaware.
Or Rhode Island. Yeah.
Rhode Island.
In
There.
Delaware, y'all.
And then I say, okay, great. Do you have a business address there? And they go, no, my address is here. I go, well, then state of California finds out they're going to want their $800 plus the penalty and interest because you didn't pay it on time. So come back to, should you incorporate, well, we're dealing with LLCs. I find it beneficial when they have a production company more for something like that, if you're a producer, things like that. So
For all three, S Corp, C Corp, LLC.
each one's different.
Each one's different. So I do corps and personal returns, and I'm an actor. I've not incorporated yet, y'all, and I make money doing acting, okay? But it is another entity, and this is what, it burns my bubble. I'm going to be honest. LLCs burn my bubble, and so do corps. Because people, managers, I don't know who's telling y'all to do it, to be legit, but they're not tax professionals. And if they are, they don't work in the entertainment industry, okay? You have to make, I've heard 80. I would go with 150. Somebody else had been 250.
And that's consistent for year after year. Because 1 year, great. Then the next year you got.
And it's all the same income. So don't do your tax return and see you've made $150,000, but 100 of that was your other job that's not acting, right? You go incorporate, it can only be that one income, y'all. And here's another thing that people do not realize. When you incorporate, first off, you have a bookkeeper. If you have an S Corp, you have to do your own payroll. Got to get paychecks on. Same with C Corp.
You got to pay for that too.
Got to pay for that too. You got to have a corporate return and an LLC return too. Once again, we come back to the LLC. We don't like it.
That's 2 tax returns.
Thank you.
More money.
Thank you.
And expenses. And don't get an expense just so you can write it off.
Thank you. People do corp so they can write off expenses. That's bullshit.
Now, let's say you get a.
Sorry. Oh my gosh. Oh, shouldn't have said that. Is this being recorded?
That might get edited out.
You guys are too funny. Let's say you become a series regular on a nice TV show and you're going to make $200,000 a year. Okay, great. Now you might want to consider incorporating because now you can write off all those expenses and stuff. But like she said, you got to hire a bookkeeper, you got to hire someone for payroll, and then you got to make sure you file your corporate return, your individual, and all that.
And also, I will say this. This is the biggest one, and I want you guys to take this seriously. So say you incorporate, okay, and you go to do a job at Nickelodeon. I'm not saying Nickelodeon would do this. It's hypothetical. All I'm saying is you need to make sure those people are going to give you a W-9 because of the AB5 law that went into place in California, I believe 3 years ago. It's harder for people, businesses to issue 1099s when they should be issuing you a W-2. Now, if they're going to do that, there's no reason for that corp.
So what you're saying is if you're not a C Corp or an S Corp, they won't issue the 1099. They'll issue a W-2.
Yeah.
And still then you got to make sure that they'll do what you just said.
Yeah.
Have you fill out a W-9 and not a W-4. Once again, we talked about this before.
I know.
But I know it's a lot. A W-4, if you fill that out, you become an employee. So you get paid, you get a W-2 at the end of the year. Mm-hmm. And then if you fill out a W-9 and you make more than $600, you should get a 1099 NEC, non-employee compensation, or possibly 1099 miscellaneous. But that's usually other income. I had one that won a game show for $350,000, and he was like, "Hey, look, I got $350,000." I go, "Great, let's do a temporary tax return and see what you owe in taxes before you spend all the money."
Yeah.
Did you offer for him to pay quarterly estimated taxes?
Yes, we did.
There
Very
we
good.
go. There it goes.
Yeah, do estimated tax payments. I had a client who was doing choreography for Madonna, and she paid it on her 1099, and she got like $400,000 or something like that. It was a large amount. And so she went ahead and made the quarterly payments. What you do, because, okay, let's go back to this. If you work for an employer, they are going to send in federal tax, Social Security, Medicare, state tax. They're going to take care of what's SDI, state disability insurance, all this stuff. You don't have to worry about it. All you have to do is work. But if you get a 1099, guess who's responsible for the city tax now? You are. And the federal tax, state tax, Social Security, Medicare. Oh, wow. So that's why we do something called estimated tax payment, so that we don't owe so much at the end of the year.
It's like you taking out your own taxes.
And if you decide, oh, I'm just going to save it, well, then they may issue you a penalty at the end of the year for not paying in advance, because the employer went ahead and, when you work for the employer, they go ahead and send that in for you right away.
So the moral of the story is, don't do it.
Can I tell you a secret?
Yes.
Okay. So if you're getting 1099s, right? And you hear, of course you're going to hear this. You're going to hear this. You should incorporate. So you can get an EIN. What's an EIN? It's like a social security number, but it's an employee identification number. You can get that number for free from the IRS without it, like, what am I trying to say? Without doing a corp.
You can do a DBA if you want.
You can also do a DBA. Go on the
DBA,
IRS
what's that mean?
website, irs.gov. Say I want an EIN. Sole proprietor. Do not put for LLC or corp, y'all, because they will be expecting that return.
Yeah.
Right? Get an EIN. So then if you do have those 1099s, but you don't want to put your social on there, you have an EIN to do that without having a corp or an LLC, right? You got it? Yeah.
I like that, especially if I have composers and everything that work overseas.
Yeah. Yeah.
So you want to keep things private and secure.
We got that.
We had mentioned the word DBA. That stands for doing business as. And you can get one of those, like, let's say you want to call yourself, I don't know, Jersey Juggler instead of, I don't know, maybe you did.
Well, that also goes back to the separate
That's
bank
my
account
stripper
thing I
name.
was mentioning, right? So you could have a bank account that's doing business as, and then your performer, or entertainer, or stage name, and then your regular bank account where your day job money comes in.
When you have a DBA, you can go get a business bank account. Yeah.
And you may also, depending on your bank, be able to get an AKA, and also known as. So I don't.
What's the difference between the DBA and the AK?
It's less formal, but
Okay.
it makes sure you can make sure that you're going to get paid in that name that you want to use as work.
Oh.
With
So-
the EIN.
Less issues depositing, right? What's a loan out?
That is the S Corp or the C Corp.
But the concept of that is basically that you've now create a separate entity, and that entity is going to take you as your performer, and they're going to loan you out to work on a production. And so then they pay the production, and then the production pays you. Or your loan out, they pay the loan out, and then loan out is supposed to pay you. And that's why you have to get payroll, so you can pay yourself.
And an LLC does not count as a loan out. Don't do it.
I hope that makes some
Again,
sense.
don't. I feel like we could make a Halloween video of don't do it.
Don't incorporate.
LLC. Goodness. Okay, so I've heard horror stories from actors that they'll get something in the mail that says they owe the city of Los Angeles
You want to use that BS word again, Em?
sum of money in taxes because they didn't file a business license with the Office of Finance with the city of LA. So, and they might have a bill for thousands of dollars, and they're an actor that doesn't make that much money. So what do we do to prevent that situation? And what is this city of Los Angeles business license that some people may not know about?
It's a racket.
City of Los Angeles business. It's called a certificate.
Finance.
Yeah, Department of Finance. Yeah, that's who you deal with. But
Oh yeah.
license. It's called a certificate. I was just looking at registration. I forget. I have it on my thing, and I was dealing with this yesterday with a client because they didn't file, they didn't get their business license, whatever. Here's the gist. There's a lot of different parts to it, but the gist is if you get a 1099 NEC and you file a Schedule C, the city of LA comes along because if you're a W-2, the employer takes care of it. They pay once again, they pay the federal tax, city tax, Social Security, Medicare, all that. But if you now get the 1099, the city comes along and goes, oh, we want money too. You are exempt if you make less than $100,000 or $300,000 as a creative performer. but you must file the exemption in advance. And the exemption is due every year, usually around February 28th or 29th if it's a leap year. Yeah. And what you do is you go on their website. First of all, you have to register. So they have to send you this certificate, which has your number, and then they associate your address with it or whatever. But then you can go online, and as long as you make... Okay, I'm going to give an example now. Because I had a client, happened to be a casting director, and she got a bill for $600, $622 in the mail. And I was like, oh boy. I said, go down there, talk to the city. Because if you go in person, we found back then, now they do things a little better, but back then if you mailed it in, it went to an abyss. Nothing seemed to happen. And they get another bill in the mail from the city. So I said, go down there, explain this and this. She goes, will you go with me? As a casting director, I'm like, I'm going to make a friend. Let's go. So I go down there, and I walked in with her, and I said, it says here she made $50,000 on her Schedule C. Where'd you guys get that number? Oh, we make it up.
They make it up.
Ooh, I'm like, I'm an accountant. I can make up numbers. But I was like, we were trying to be honest and do the right thing. So I said, here's her Schedule C. She made $6,000. She goes, no, you owe $110 or something. And I was like, no. That was made in Beverly Hills. Here's an exception. If you live in the LA County, you're subject to the city business tax. Well, there's cities within LA County that are exempt from, get taxed at a lower rate, only 20%. So then she goes, oh, you owe $32.22. I go, pay that. Let's get out of here. When she was ready to pay the $600 originally, I was like, no, you don't owe that. So the best thing to do is if you're going to get in the entertainment business or any business for that matter, and you live in LA County, you're going to get, and you probably want to get a certificate of registration for the city business tax. And once you have that, then you can file an exemption every year.
This is just for 1099 income.
That's right.
Yes, and here's what I do to clients too. I say, go down there, and then as you talk to them, say, oh, you want my W-2 income? They go, no, we don't want that. They always go, oh, no, we don't want that.
No.
But I always try to give them the W-2 income because they know better. They know that.
Oh, good.
Yeah, I always use that as an excuse. Did you make any other money? I have W-2. Oh, no, we don't want that. So it's only the Schedule C income that they're assessing for a city business tax. Sorry, that was a long answer.
Yeah. Okay.
But very informative.
Don't ignore the letter. Okay.
But also, don't be like, when you get these scary letters, like, they're made to be scary. They're made to keep you intimidated. And, like, take a breath, research it, become educated, contact a professional, and then let's handle it step by step.
That's right.
As enrolled agents, we get letters. I get letters all the time from the IRS. So I just look at them and go, oh, what's going on?
Yeah.
And they don't.
I get excited now. I'm like, oh, what are they saying?
They don't contain the word love.
They're always trying to scare you out of money, though. That's
An
the goal.
online submission question. Can you explain the recent EDD change? If I pay myself through my acting LLC, am I no longer eligible for unemployment?
Well,
Very
first of all, you
specific.
can't be an LL.
Can't be an acting LLC.
Right.
Yeah. So I don't know.
This person needs to clean things up.
Okay. Thank you. Yeah. Let's get things in order and then.
Moving on.
Okay.
Okay.
You,
Am I
it has
correct?
to be a C Corp or
Or an
an
S
S Corp.
Corp, yeah.
You can't do it as an LLC. You can't pay yourself unemployment.
Yeah. You. Well, you can. I had an S corp that did pay them. They ran the paychecks right through the paychecks. You are paying EDD on that. They will come after you if you're not, so they will get on you. So you can still claim unemployment through a corp. It is tricky though. So to answer that question, there is no clear answer. It is gray, and you just have to do in-person interviews. Like it does take a minute. It's a lot.
But
Harder
we're
to
just not.
navigate.
We're not incorporating. So
Yeah.
yeah.
So
Well, you
here's the
can
thing. Remember
incorporate.
when I said earlier?
There's no
it
acting
depends.
LLC, right?
Right.
We already talked about that. Single member LLC, get out of here. Right? Yeah.
Right.
Okay.
Am I correct that any equipment purchased for self-tapes, lights, tripods, paint, background, wallpaper are all write-offs? What about my cell phone? If I film with self-tapes, what percentage is that portion?
Yeah. Patty, go ahead. Yeah. Oh.
How we'll kind of keep track, like do some math, like figure it out, like out of a month, how many days did you use your phone for self-tape? Like do some division. It's a good educated guesstimation on a lot of this stuff.
Yeah, and I always say it depends a little bit on how much are you pursuing the business? How involved are you? Because sometimes we take breaks because we're financially struggling or we had a family situation, so we had to take a break for, a year or 6 months or whatever. Or or whatever. So if you're really pursuing it and doing a lot, then, you can be a little more aggressive. Like with the cell phone, I usually take 50, 60, 70, 75%. It depends. I mean, ideally.
How does that percentage work if you have a home studio?
Oh, home office deduction?
That's right.
Right. How do you calculate the percentage?
Okay.
Or square footage, or how does that part work?
You want to talk about home office? You want me?
Yeah. Well, we learned it in our EA class
Yes.
too. Oh my gosh.
So, okay. So
sorry.
first of all, to claim a home office, there's various things, but one of the regulations from the IRS is it needs to be a separate room or a sectioned off area used exclusively and routinely for business.
right.
Now, not in my audit, but I'd heard someone took a picture of it because the auditor asked them, and they showed it to them, and there was a dog bowl in the picture, and they said disallowed
Out.
personal use of the space.
Yeah.
Now, that's probably not, and they go, well, the dog performs. I don't care. Let's not give them the option, okay? But so you have there's a form called an 8829 on the return that you can use either a home office deduction on the Schedule C, or it flows to what we were talking about, 2106, and that only goes to California, but
Or the Schedule C.
or the Schedule C. Yeah, I said that first. So anyway, it's all right. So then you put in your square footage of the unit, which you get the total square footage of your rent unit or whatever it is, and then you put in the square footage of what specifically office area is. And
Our algorithm in our software does the rest.
Yes.
But we need the
Yeah.
correct information from you.
and then your total rent paid for the year, and then utilities, security, any other stuff you have that cost money. So
So I would say don't worry about percentages. Just go here. Let's just do it right now. All right. If this is the area, 1, 2, oopsies, 3. I'm fine. I'm drunk. 4, and then 1, 2, 3. So 3 times 4 is 12, right? 12 square feet. There you go. That's how much your office is. And then you do the square footage of the whole residence. And you put that on the 8829.
now, how do you get the square footage of the residence? Well,
Yeah.
yeah, I would get
in your lease.
it's in your lease sometimes. Usually, yeah, that's what you say. If you're friends with a landlord and you pay your rent on time, they'll probably tell you.
How good are friends?
There it is. Yeah.
So I have one last online submission question, and then we're going to questions from the audience. So get your questions ready because we're coming to you guys next.
Ooh.
All
I'm
right.
not excited. You're not excited.
Don't
at
laugh
all.
too much. All right, don't get too
This
happy.
is a tax party, you guys.
See,
party,
it can
I
be
love
fun.
that.
Can it be fun? We told you.
How do I, quote, pay myself right now? All acting paychecks go into one account that I don't touch. Afraid I won't have enough money for taxes, or if I pay myself, I'll be double taxed.
I'm assuming that is that all she has. They not. We don't know. They.
Would you like to see
We don't
it?
know. We don't know the pronoun. How do I pay myself? Okay, so I believe because I've had several clients that have asked me this. I believe because they've already incorporated, and you have to pay yourself when you're incorporated with a C corp or an S corp, right? That's that paychecks that we were talking about. So this number is what this is not going to help. If this is your first year having a corp, okay, I would say don't be so hard on yourself with paying yourself because we got to figure out the numbers first to be able to give you those numbers for the following year. But okay, let's just say you come to me and you're like, Em, I made $40,000 through my corp this year. I haven't. I know, right? It's great. We're going up. This is just beginning. 40,000. I've got about 15,000 of expenses, so that leaves me 25,000. Right? That the net on that. Do we all follow there? Okay, cool. Now on 25,000, I would tell you need to run 70% of that 25,000 through payroll. I can't give you the exact number on that right now. Holy nuts. And let's say 18,000. We're going to run 18,000 through a W-2. That's paying yourself 18,000, and then the rest is going to be on the K-1. Okay? If you have an S corp.
What's a K1?
Oh, hello. Ha ha. Love this. My husband loves to say K1s. He has no idea what a K1 is, but he always, is it a K1? I was like, you know it is, honey.
Is that late night conversation?
That's bedtime conversation. That's awkward, but it is awkward. Anyway, the K1. So the difference between a C corp and an S corp, the C corp is all by itself, right? So if you have the 40,000, you pay yourself 18,000. You come all the way down, and then what did I say? Expenses. Oh heavens, I'm losing track. Thank you, honey bun. But we're going to take all that to zero. Okay, you know how people say pay out the end of the year, make sure you're zero?
Zero out.
That's for a C Corp. It's not for an S Corp. C Corp, okay? We're going to bring that on down. So you're going to take your paychecks all the way up to probably 25,000. Then you got 25. Then you got 15,000 in expenses. Cool. That's a C Corp. Love you, love and light. Now we got an S Corp over here. 40,000, 18,000 paychecks. Cool. 10,000. Why did I put myself in this position? Thank you.
15,000.
And then we've got the net. So what was the net? Like 10,000, 12,000? You guys were okay. We're okay. We do taxes. Anyway,
Put it in this.
the net of
Software,
this.
it'll figure it out.
It'll figure it out. The net of this, after we've gone 40, 18, 10,000 in expenses.
No, 15, so 30. We got 8,000 if you're at 40.
They're doing this in their heads.
Oh my God. So the net of that is going to flow on a K1, and that K1 is going to flow to your personal return. So on your personal return, you're going to have a W-2 and the K1.
It's called a Schedule K1 too.
That's right. Does that make sense? Does that tell you what's the difference between a C and an S?
Clear as mud.
You're like, no, girl, come on. Okay, sorry.
Okay,
You gotta answer the question. You're like, stop it. Just stop talking. I'm sorry.
As you were spouting out these numbers, all I was thinking, I just really want to get a feel from the audience on this.
Oh, yeah.
How many people feel, sheesh, I've never made thousands of dollars from my acting?
Yeah.
Can I get an applause for like I'm on the lower end, just in the few $100s?
Oh, no, we got professions in
Yes,
here. Oh,
okay.
we got some.
So,
Okay, we're going to making it.
Right. I'm just wanted to, because it's hard to see you guys, so I wanted to hear it. So the biggest question I think before we turn to the audience is doing my taxes when I've only made a couple $100s from taxes.
From acting.
I'm sorry. When I apologize. When I've only made a couple of $100s from acting, can I still do my taxes and write those things off? Who's in that boat, right?
Right. Well, then you have what's called job search cost. And it won't go through on the federal return, but it could go through on the state return because we as performers are always looking for work. So a lot of our expenses are what's called
And
job
researching.
search.
That's right.
Great. Thank you for that. Okay. Thank you so much for answering all of these questions.